Hey everyone, Alphabet reported fourth quarter and 2023 earnings results after the markets closed and the stock price crashed nearly 8%. It's down 7.7% as of this recording. So why did Alphabet stock crash following the earnings? Is it a buying opportunity? Should investors stay away? Those are the questions I'm going to address in this video. Remember, coming into this quarterly earnings review, I had Alphabet stock rated as my top stock to buy. It was my top stock to buy for 2024. So you're going to want to tune in to see if I'm changing that recommendation or keeping Alphabet as my top stock to buy. So let's jump into these financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Alphabet's revenues increased by 13% to 86.3 billion, up from 76 billion in the quarter that ended December 31st. That increase in revenue led to a surge in operating profitability up to 23.7 billion. That was up from 18.16 billion in the same quarter the prior year. That led the operating profit margin to increase from an already solid 24% last year to 27% in the same quarter this year. The CFO, Ruth Porat, saying, "We remain committed to our work to durably re-engineer our cost base as we invest to support our growth opportunities." Now, if you recall, early 2023, Alphabet announced thousands of job cuts, and I'm going to give you a hint. I think this is why the stock price is reacting the way it is following the earnings results, and we're going to get a closer look into that a little bit later in the video, because on the surface here, if you look at revenue increasing by 13%, which accelerated from last year, and you look at operating income jumping the way it did, the operating profit margin increasing, from these numbers, this is no reason for a stock price to decrease. In fact, this would cause a stock price to increase. So there's an offsetting factor resulting from this quarter's earnings results, and we're going to see some of that. Looking at segment level results, you can see Google services in total increased from 67.8 billion to 76.3 billion in the most recent quarter. From here, Google Network was the segment that struggled from 8.47 billion down to 8.297 billion. Although Google Network is not the core of Google's business or Alphabet's business, it's really Google search that's the primary driving force behind Alphabet, and YouTube also a driving force, growing at an excellent rate. Google Cloud also increased to 9.192 billion, up from 7.3 billion. So overall, solid growth from Alphabet across the board except from Google Network, even though it may be some categories did not grow as quickly as Wall Street was expecting. Overall, the growth was solid. Here's the struggle here. Number of employees decreased from 190,000 from the fourth quarter that ended 2022 to the fourth quarter that ended 2023, decreasing from 190,000 to 182,000. So roughly 8,000 decrease in headcount. We're going to see here that Alphabet level activities caused a $3 billion loss in the most recent quarter. Alphabet level activities include charges related to the reduction in force and our office space optimization. Now, I've been saying, if you've been following my channel, in 2023 and late 2022, there was several tech companies, including Alphabet, Amazon, and others, that announced thousands of job cuts. And I highlighted Alphabet as one of the companies that handled it the worst. They were paying so much in severance, so generous with their severance packages to employees, and the news that was coming out, the packages that employees were receiving in these severance packages were, in my opinion, way too generous. As a shareholder, and I still own Alphabet stock, I was not happy with those kinds of severance packages to their employees. If you were going to do that, I argued, if you were going to give such generous packages, some of the packages included 6 months of pay for employees that were leaving, on top of medical benefits and more. So I argued, if you're going to pay all that much to let go of employees, why let go of them anyways? Why have this layoff? Why have this mass layoff? Why not just let employees quit and reduce your workforce through attrition? Don't hire new employees, or don't hire as many new employees, and let your headcount be reduced through attrition if you're going to pay 6 months of pay anyways, right? So for that reason, I argued they were the least effective in these layoffs, the one offering the most generous severance package. And that wasn't, I don't think that was prudent by Alphabet. And you're seeing that here. I think investors are not happy with the price that Alphabet paid for these layoffs, for this restructuring. So here we get some more detail. In January 2023, we announced a reduction in workforce, and that resulted in employee severance and related charges of $2.1 billion for the 12 months ended December 31st. On top of that, they optimized their global office space, and as a result, that led to exit charges of $1.2 billion and $1.8 billion, $1.8 billion for the year ended December 31st. This I'm a fan of. I've been arguing that companies should not have tried to bring employees back in person, or should not have tried as aggressively as they have been trying, because having employees work from home, I've felt, was a win-win situation. Employees get the more convenient work location. They prefer not to commute to the office. That saves them time, right? In some cases, some people are commuting 1 hour to work and 1 hour home. That's 2 hours. If you consider an 8-hour workday, that's 25% of your workday traveling, when you could work from home and be just as effective, right? What's at the office that's not at your home office, right? So I argued that it's a win-win situation. Employees get that benefit, and as a company, you don't have to pay for the office space. You don't have to pay for the actual office equipment, the computer, the technology, air conditioning, heating, maintaining, all of that. Why would you try to do that? Well, management argued that people are more effective when they come into the office. Okay, I won't argue against that, even though I disagree. I'll give you that. But are they effective enough to offset the significantly higher costs of having the person come in, right? If it's going to cost you, let's just give hypothetical numbers, $100 to have a person come into the office, but they add an extra $10 of value by being in the office versus working from home. Is that a worthwhile trade-off? I don't think so. And so I like that Alphabet is reducing their office space, and I hope it's with the aim of being more flexible in terms of work from home arrangements. The $2.1 billion I mentioned already, investors are not happy with that. I am not happy with that as a shareholder. Why not just reduce your headcount through attrition if you're going to pay this much to lay off people? If you're going to be that generous with the severance package, why not just reduce your headcount through attrition? I've been arguing about this all year long for Alphabet. So not happy with that. I'm not surprised investors are not happy with this either. And I can understand the reaction after this announcement. And the last reason I'll discuss why the stock price is falling after earnings is a decrease in cash flow from operations. You can see here in the quarter that ended December 31st, even though profitability surged, cash flow from operations decreased. You can see here net cash from operations falling from $23.6 billion to $18.9 billion in the quarter that ended December 31st. So the initial reaction to this news might be negative, like, oh, they're decreasing. But it was just a timing factor, because if you look more closely, the cash flow from operations would have been significantly more positive had it not been for a timing of income taxes paid. So last year in the same quarter, they had a benefit of $1.44 billion in income taxes, timing of the payments, whereas this year they paid $9.8 billion in taxes in the quarter. If you zoom out and you look at the whole year from 2022 to 2023, their cash flow from operations increased by more than $10 billion, from 91.5 billion to 101.7 billion. So overall, the cash flow from operations, not a reason for investors to be unsatisfied with the current quarter. Although the severance package and the costs for the restructuring, I agree with 100%. I've been upset with how they've handled these layoffs. I wanted them to do layoffs because I felt like they were bloated in terms of headcount, but not if they were going to pay so much for severance and restructuring. Overall, to update my recommendation of Alphabet stock, especially after it's down nearly 8% as of this recording, following the news, I'm still keeping Alphabet stock rated as my top stock to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.